Hello and welcome to the Week Ahead video. A couple of things to brief you on over the next 5 trading sessions. Then there's slightly more light than we have seen over the past couple of weeks. There are still some key risk events on the immediate near-term horizon worth looking out for. First of all, on Wednesday we have the FOMC minutes, where the members of the FOMC are expected to reiterate that they do still see the scope for accommodative monetary policy, particularly in the light of the very weak Q1 GDP number from the US, which of course was weather dampened. This is as Fed's Yellen described the Q1 growth figures as transitory and not affecting the long-term growth prospects for the US economy. So let's see if this is reiterated. As a reminder, the federal funds rate hike is first priced in for June 2015. So we'll see how that pans out. We'll head through Wednesday's FOMC minutes. On a similar topic, we have the Bank of England minutes this week, which are expected to remain with the board unanimous against any tightening from the Bank of England. Futures markets currently pricing this in for around Q1 2015. A big outlook here from the MPC is on how they view slack in the UK economy. The latest quarterly inflation report did suggest this was between 1.0 and 1.5%, so the minutes will be closely eyed, see if there's a lot of divergence among the Monetary Policy Committee in regards to how much slack must be exhausted before the Bank of England do hike the bank rate from the historic low of 0.5%. Then as we head in towards the tail end of the week, a lot of the focus will shift to May the 25th, where we see the Ukrainian presidential elections. Now, the West, as well as Russia, have now backed these presidential elections, as long as there's no military intervention from the Kiev-led army, which are still conducting these anti-terrorist operations in the eastern regions of Donetsk and Luhansk, who still do claim themselves as a republic away from Kiev itself. Now, Russia have said that if the Ukraine military do intervene any further, this would impede the legitimacy of such presidential elections. And if Russia themselves do intervene, as recently as this weekend, German ministers have stated that the Russian economy could be subject to further sanctions if this is the case. And on a final note, as we're in towards the start of June, of course all the focus will be on the ECB's outlook for monetary policy. I have a number of ECB speakers this week who are more than likely to comment on the recent reports that the ECB are preparing a package of options for June that includes a rate cut across all the 3 major rates provided by the ECB, as well as a potential extension of full allotment and even a €200 billion stimulus package that help boost business lending and bring down those borrowing costs for the beleaguered SMEs in Southern Europe. Of course, we'll bring you all those releases as soon as it hits the wires, as well as any other relevant commentary to your trading. In the meantime, that's all from me. Make sure you have a fantastic week.